Hello traders, welcome to Quantsapp. My name is Diljit and today we're going to learn how you can make a good strategies by option selling. Now you must be thinking that how we can create a strategy, what can be the target, what can be the stop loss, what can be the range, and which of the stock you can or which of the index you can do for the selling. So all these parameters are covered by Quantsapp. So there is only one tool which can help you identify everything and you can start trades with Quantsapp also. Now, if you are new here, do subscribe our channel, and if you are new to Quantsapp, sign up now. I'll put up the link in the description. As you'll sign up to Quantsapp, you will unlock 20 plus free tools which will help you in your options trading journey. Now, if you want to know what kind of strategies or how we are using Quantsapp, you can come here in the learn section and you can go in the video library and you can check out the multiple videos of understanding how you can use Quantsapp tools or strategies in your option trading journey. Now, if you have any doubts or queries, you can come here at the support section and you can write us or you can WhatsApp us and we'll try to help you out. Right? So let's move on to the topic and let us understand that how you can do option writing easily with just one tool. Now, this tool is option writer tool. Okay, it is made only for the option sellers. Okay, so if you are selling non-directionally, if you create straddle or strangle with hedges, obviously, so any kind of a strategy if you are making, you can make with the help of Quantsapp. So you can come here in the trading, and under the Quant Models you can come here in the option writer. Now as a seller, you are having some parameters which you need to keep an eye on, or you need to keep an eye on these things because there you can face losses. Other than that, let's just suppose if you are a seller, okay? Let's just suppose you are a call seller. So your calls, if you are selling a call, your aim is that the price shouldn't go up. Okay, so if the price goes up, you will have a loss. Okay, but other than that, if the market is going sideways or if it's going down, that is giving you money. So this both side you will make some profit. Because again, when you're selling options, you are having a theta positive strategy. So that will help you in your time decay. In the time decay, you will be gaining out a little profit. Now again, if you are a put seller, so you know that if the price is going down, you can make some losses. Okay, but if the price is going sideways or if the price is going up, you can make few profit here. Right? So as a seller, out of 100%, seller have mostly the 66% chances. Okay, so selling an option is giving you more chances making or being profitable than an option buyer. Okay, now even the option buyer, it's not necessary if the price is going up, it is going to go at the desired given strike price. So even here they are having 50% chances in the 33%, that is almost around 17%. So the buyer of option is having only 17% chances of gaining profit, and the other 83% is loss. That is why most of the option buyers generally tend to make few losses, is because the chances are very less. But as a seller, this is your chances of making profit. So as selling, you can do selling safely with hedges. So somewhere, in the selling part, you can make a little profit for yourself also, that also consistently. Because see, when you're selling an option, let's just suppose you have made a straddle in, let's just suppose Adani Enterprise or Reliance. So, you know that the price is not going to cross around, let's just suppose now the current market price around 1300 or something. So you know that it's not going to cross 1500, and you also know that it's not going to cross 1000. So you have a specific range in your mind that this is the range and this range won't be broken. So you can identify such ranges by the help of OI or simply by the help of the tool, and after identifying the range, you can simply go and create a straddle or a strangle. Now with that, you can make money out of that if the particular price stays in the range till the expiry or till the given particular time. Now let's jump on to Quantsapp and let's just open the tool. So this is the option writer tool. So initially here you can put out your stock or the index if you are having any specific desire of a stock. So you can specifically put that. You can add the expiry and the days of your holding. So let's just suppose you are holding it till expiry. So you'll pull it till end. If you are trading on the intraday basis, it will show you till the 1 day. So it will show you day 0, that is indicating you for the intraday. Now as you can see, we are having a chart. Okay. Now before even starting here, I would suggest that if you want to select a stock for selling, so we are having a selector also. So first you can go on the selector and you can come here in the selector and you can identify which stock you can do selling or in which stock you can make the most benefit out of. Now here you will see the list of all the stocks. Okay, we are seeing Nifty and Bank Nifty. Now you can select the tenure, is it intraday or expiry. Let's just suppose we are trading till expiry. Right. So now you can see Nifty, Bank Nifty is there, and other than that all the stocks are there. Now what you need to do is you need to sort it with the IVP. Now what is IVP? IVP is the implied volatility percentile. It is the measure, it will help you identify if the IVs are high or not. Now if the IVs are high, that means the premiums are already expensive. So if the premiums are expensive, you can generally go and do the selling. So simply by clicking on the IVP, you can sort and you can get the top ones which are having the highest IVP. Just a second. Yeah, so you can just sort it like this. Sorry. Yes, so you can see that we are seeing Adani Ports is there, Adani Enterprise is there. Just a second. Idea is there. Okay, so these are the stocks which are showing you good intent for the selling wise. Okay, because you can do selling here because here the IVP is high. Okay, now IVP is higher, but again with that you can see the trend is also strong. Okay, so if the trend is strong, that is indicating you that particularly this can go on the directional side also. So again, as initially we spoke about, you need to be in the range. So strong trend is not supporting us. So you need one with the oscillating trend. So simply you need to identify the one which is having an oscillating trend and having the highest IVP. So I believe this is the stock which you can take into consideration, which is M&M. So M&M can be your particular stock which you can select, because here as we have sorted with the IVP, so it is having high IVP, almost above 50. So still the premiums are a little expensive. As you can see, the other parameters, gap up risk, gap down risk is also less, and the trend is in oscillating. So basically the trend is not an uptrend or a downtrend, it is on a sideways trend, and that is what you need if you want to end it in a range. That is what you need. So simply you can select here oscillating. Okay, simply you can select here and you can directly select here M&M, and as you can see we are directly jumping onto the charts. Just a second. Right, so as you can see, this is M&M's chart. Now you can see the range is already identified to you. Okay, so this is intraday. Let's just suppose we are doing it for 10 days. Okay, so this is giving you a range. Automatically the range is identified by Quantsapp itself. Now we are having the range indicators as a Quantsapp indicator is there, Bollinger's is there, Z score, straddle range, IV and highest call and put OI. So simply you can select any one of it, and on the basis of that you can select a particular range identifier. Now your range is identified. As you can see, we are seeing around 200 points range. Okay, so the range is starting from around 3100 and it's starting from 2900 and the highest we are seeing 3100. So that is a 200 point range. Now the range analytics is given to you that the gap up risk is less, the gap down risk is also less, and the comparometer is also there. Now what is comparometer? You can simply go on this I and you can simply read that where the selected stock index stands with other than on gap risk. So simply you can identify that the camperometer is telling you that this is the range identified and this range is less bound to be broken. And with that, next is coming the writing attractiveness. Okay, now this is very important part. Okay, so this is the main basically after identifying the range, this is the part which you need to keep an eye on. This is very important. Okay, so IVR and IVP is given to you. Okay, so IVR and IVP is the parameters for the IV, implied volatility, and again implied volatility is having a great role in this selling, because whenever the implied volatility is increasing, a seller is having a chance of making losses. So whenever the IV is falling, that is the time seller makes benefit. So IVP and IVR, it is having a mean reverting nature. So whenever it is at a high, it goes at the low. So whenever you are seeing the IVP is at high, you can go for the selling parameter. So that is what we see here. If the IVP and IVR are in our favor or it's not in our favor. So you can simply see here, green is suggesting you lucrative, which is in your favor. Yellow is moderate, so not very risky, not very lucrative. Again, in red, we are seeing risky. So simply IVP and IVR, if we are seeing it is moderate, so somewhere we are not having a heavy risk on the IV side. So that means the premiums are, a little expensive. So you can go for the selling. Again, now we're talking about theta speed. So now we can see we are in the initial half of the month. So theta decay will be very less because just the month has started. So theta decay is showing you that it is risky because theta decay will be less. Again, you can see gamma risk is in your favor. Now, whenever we are seeing theta speed and gamma risk, okay, so theta and gamma, okay, they both are inverse. Okay, so if this is increasing, no, or if this is getting lucrative, okay, or in your favor, this will become red, risky. Whenever this will become risky, this will come in your favor. So they are opposite of each other. Again, see, whenever we are far expiry, the theta decay is low. So that is why we are having a risk. But whenever you are near expiry, the theta decay becomes in your favor and gamma risk comes in your risk, because again, gamma risk, you can see sometimes you can get a good explosion in the particular option premium, and sometimes you can make heavy losses with that also. So gamma risk is always maintained when it's near expiry. Now last thing we can see is the trend score. So trend score, which we identified in the last, which we seen that it is in an oscillating trend. So what we need is that we don't need a strong trend, we don't need a mild trend, we just need generally oscillating trend is in your favor, because somewhere it is sideways and it can tend to close in your particular given range. Now on the basis of that, okay, now all the particular parameters we have taken into consideration, all of this is done. Now on the basis of that, you can see there is a strangle and a straddle. So there is a strangle suggested to you. So you can see the system is automatically creating a strategy for you. So this particular strategy is telling you to sell C3050, sell PE2950 at this given price. And if you execute this, so somewhere this will be your payoff chart. Okay, so you can analyze your payoff chart, that somewhere your break evens you can see somewhere below 2900 and somewhere above 3200. So this is your range, almost around 300 point range you are having. So if the price is closing near the 300 range, somewhere you can make benefit out of it. Now when we talk about the strategies risk to reward, so you can see the premium inflow is given to you. Now your profit is given to you around 7800. Okay, so that is the profit given to you, and SL is around 3500. So that is almost that you can see that you are earning around 8,000 and you are losing around 3,500. So you can see that is almost like 1:2 risk to reward you are having here. Both break even points are given to you. So you can keep stop losses at the break even points, and with that you can directly execute the strategy from here. So if you are tied up with our brokers, you can directly execute the trade from here. Now see, again this strategy is having a unlimited risk. Okay, so you can lose as much as the money you can. So simply to avoid the unlimited risk, what you can do is you can add a hedge. Now whenever I press yes to a hedge, you can see that it is showing you choose your protection. So you need to identify the hedge positions, you need to identify for yourself depending upon your risk, how much risk you can take. You can basically identify your hedge positions. And now with the hedge positions, what you can see is in the hedge positions, your particular, if the break even price crosses no, then also you're not having an unlimited risk. Now you are having a limited risk strategy. So again your risk is minimized here. Okay, so simply if we go here, you can see now on the basis of that, you can see the PNL is also changed. You are now having 770 profit and 182 stop loss. So simply now you can see the strategies having, now it is more than 1:3. Okay, so your risk to reward has now increased from 1:2 to 1:3, almost more than 1:3 now. So this way basically after hedging, somewhere your risk to reward is managed, and here you can gain good profits if the price closes in the range. So that is a payoff chart you can see here. Okay, and you can analyze also that at what given day what will be your PNL and what can be your profits at the last day. So it is showing you everything at what price level, what will be your PNL, and this way you can identify and you can manage your risk accordingly, right? So simply if you just increase the quantity, you can see the PNL according to your quantity size, and if you press on execute, you can see a trade manager has also uploaded here. So you are getting an alert. So if you are having your profit is around 770, so you can see the after 80% of your profit, it will give you an alert that the profit has been made. Again your SL alert is also there. So if your SL is getting hit, so SL alert will also be given to you. Trail to minimum profit, so you can trail after 50%, you can start trailing also. Okay, and all these notifications will be submitted to you by the Quantsapp itself on the mobile. So all the notifications, if your profit is hitting, if your stop loss is hitting, if your if you are trailing and your trail is hit, trail stop loss is hit, you can see here and you will get the notification from Quantsapp itself. And as you save this, basically now you'll be gone to the trade broker panel. So if you are tied up with our brokers, you can directly execute our trade. Okay, so you can directly execute the trade from here also. Okay, so this way you can do your option selling very easily, and that also in one window. So this is the indicator which you can use, the Quantsapp option writer. This will help you in your overall selling experience. Now, I hope you like the particular tool. If you have any views, you can drop it in the comments. Thank you so much for watching, and do be with us for the next videos.